In this video we're going to talk about fib levels, fib retracement tool, and also cover the fib extensions and understand how to apply them and how to use them to your charts when helping you provide an extra reason or confluence to enter or exit a trade. So take today's pound dollar trade as a good example. We shorted this as it started to move down, pretty much looking at yesterday's levels. Was interested in shorting it yesterday, but it popped up and went up, retested the high previous structure. You can see that here at around 132.60. So what we do is we take our fib levels, and we would say, okay, this is the range that we're currently in, and we want to gauge this move to the downside, and we want to understand, what sort of a retracement are we going to have? Are we going to have a full 100% retracement, or are we going to have a partial retracement to one of the fibs within this range? Or is it going to make what we call the third option and provide an extended move and make a new low? So we call this the 3 option rule, which we touched upon yesterday. So just to share it with you today in a little bit more detail, because we were doing some one-on-one coaching with one of the guys and touched upon this. So he asked about the fib extensions. So it's okay. So this is a really good example. So what we'll do is we'll focus on what's actually happened here with the price action, and we'll say that this is the last swing low at 130.64. And we're looking for the last swing high, which happened this morning at about 7 o'clock London time. So around 132.54. They're your fib levels. So we start applying the 3 option rule to this, because we want to see what sort of retracement we get. So the first option is that it's going to hit one of these fibs, 38.2, or the 50%, or the 61.8. If I just bring that up, so tap on the fib tool itself, the fib retracement tool, click on settings, and there you have like your options. You can pretty much type in what you want. You can change these levels. Note I don't use the 23.6, but note I do use the 76.4, because that to me is a key area to buy and sell off. It's the last resistance. So part of the first option rule, price is basically going to retrace. Now, where is it going to retrace to? So it's going to retrace either to the 38.2, the 50%, the 61.8, or the 76.4. And then we're going to look for a turnaround. It's going to find some support in this case, and it's going to bounce off one of these levels and go up. That's the first option. If, however, it breaks through all of these and doesn't do that, then you don't try and take a long on it. But if it found some support in one of these levels, then you could consider taking a long, to go and see some sort of a U-shape complete, so pull back and then the continuation long. So it could have done that. In this instance, it didn't. It's blown through all of those levels. So that's the first option. The second option is that it's going to make a full retracement. Pretty much what it's done here. So what we mean by that is going to just retrace 100%. So full retracement, 100%. It's done that. It missed 100% by about 5 pips, which is nothing. It's still in this trade, and it's still bearish, and it still hasn't finished testing that low. So that's your second option. The third option is where we start to apply the fib extensions, because we want to say, or we want to ask the question, what happens if it does break this level? Now, it's a double bottom here. You know that this is an area where price has been and tested already, so clearly an area of interest where you will have traders come in and no doubt look to start taking longs here. Their stops will be considered just below, and they'll try and buy this current move. They could be right. I mean, trading is very much subjective. There's no right or wrong way to trade. They may experience a bit of buying, which did actually happen. If you see it on a smaller time frame, you can see that if we look at it on a maybe not 5-minute, but like a 15-minute chart perhaps, you can see that price did actually drop down and hit this level and then bounce up. So from 69.70 area went all the way up to about 130.106. So about a good 35 pip retrace, a decent retracement. It could go higher, but that as a T1 could be an excellent retrace, so good place to buy, right? Double bottom. So the third option is really asking the question, what happens if it breaks 100%? Where's it going to go? So that is our third option. And the third option is basically saying, well, we're going to look for the fib extensions. So the fib extensions that we are interested in are the 127 extension. So 127.2, let's just pull it up here. 127.2, the 161.8, and the 176.4. So you notice that the 61.8 and the 161.8 is the same, 76.4 again, key area, same. What we've created there with the 161 and the 176 is in effect a zone, a fib zone. So an area of interest where price may become slightly overextended. So if people are looking at the third option to say, okay, if it breaks to 100%, where to next? Well, then in this case we're looking at 130.12, so 127.2 extension. For us, this would be classed as maybe a breakout trade. So you're looking for it to break the 60 area to give you maybe another 50 pip move, which is quite generous, quite decent target, and that ties in nicely with previous structure as well. Also the 130 level has been $1.30, a big solid round number. So in terms of justifications to take this trade, in terms of targets, in terms of reasons for trading, you're looking for as many reasons as possible to get in or to get out of a trade, and this presents a number of reasons, including this fib extension, because this fib extension just so happens to be down around the previous structure, which is around our T2. So that's one reason to target. Previous structure is another reason. 130 round numbers another reason. That's three reasons. And to justify, if you're not in this position already, to justify taking this trade would be the fourth reason, and that would be a break of the previous low, a break of the 100%. So a break of the 60 area would present you the fourth reason as your entry. So that's really how we use the fibs in terms of understanding how to plot them in terms of retracement. Before this all actually happened, let's just clear this up so you can actually not be distracted by those other fib levels, and just to show you that. So that's what we would look at, and that's what we would look for. Nice fib extension there. So I've got my charts in the background just to give you some idea how I've got them plotted. So you can see already that on this 1 hour I've already got them plotted here to the downside. Generally then what I do is, because I'm now only focusing on the fib extension levels, I would maybe take these away so it's less noise, less distraction, but it's entirely up to you. You can keep them on there if they're not bothering you. And so now my focus becomes here, like what happens if it breaks this area, where's it going to go to? So we're looking at 130.12. So nice and clean to focus on that. And then if it breaks that, we're looking at a break of the 130 level down to 129.50 area. So 129.46 likes that 50 number. Even lower would be 129.19, 129.20. So potential for another 100 to 200 pip drop, and that's what we're eyeing up as an area of interest further downside. So I want to see a nice extension break of the downside, because clearly you can see it's rejected the upside, and so the only way potentially is down. So we are looking for further downside and holding the position accordingly. Hope that makes sense, and I hope that helps you. If you have any questions, please ask.